Today's crypto news, July 23rd. Bitcoin just slipped below $65,000 on a rough day for stocks, but weirdly, mining stocks are having one of their best days in weeks. Welcome back to your daily crypto podcast. Let's get into it. Bitcoin dropped about 2%, trading around $64,700, as a broader stock sell-off picked up steam. Google's parent company posted disappointing cash flow after boosting its AI spending guidance, and that, combined with rising oil prices, pushed traders to price in nearly 40% odds of a Fed rate hike next week, up from single digits days ago. The oil spike matters here. The conflict involving Iran widened this week, pushing Brent crude up over 7%, above $100 a barrel for the first time in 2 months. Rising oil means rising inflation risk in traders' eyes, which is exactly why rate hike odds jumped. Defense stocks like Lockheed and RTX rallied, while Bitcoin and tech sold off together. A reminder Bitcoin still trades like a risk asset when macro shocks hit, not a safe haven. Here's the twist, though. While Bitcoin slid, mining companies rallied hard. Hut 8, CleanSpark, and Mara all gained 3 to 7% Thursday. Why? They're renting out data centers to AI companies now. Hut 8 signed a second 15-year lease for over 350 megawatts in Texas, and IREN, a former Bitcoin miner, locked in $2.8 billion in new AI cloud contracts this week. Pivoting to AI infrastructure is paying off better than mining itself right now. Third, Bitcoin's dominance of the crypto market climbed back above 68%, a level that usually means capital is clustering into Bitcoin, while altcoins lag behind. Traders are watching whether Bitcoin can hold above $68,000 resistance, since that's typically what triggers profits rotating into riskier coins. Fourth, Grayscale's research team argues Bitcoin may have already bottomed this cycle, but only if the Fed doesn't hike further. That pushes back on the classic 4-year cycle theory, which would predict a bottom near September or October, with a steeper drop first. Grayscale frames Bitcoin more like a rate-sensitive asset now, similar to gold, meaning its bottom depends on Fed policy. The next Fed decision lands July 29th. Fifth, XRPs showing a split personality. Small retail wallets have been steadily selling over 5 weeks, while whale wallets accumulate, a pattern that's historically preceded recoveries. Futures open interest climbed above its 30-day average, and XRP-ETFs pulled in about $8 million in weekly inflows. But prices stuck below $1.15 resistance, so this is a quiet accumulation story, not a breakout yet. A couple more quick hits. On Solana, tokenized stocks deposited as collateral in lending protocols hit a new all-time high of $53 million, led by Camino Finance and Jupiter Lend, people borrowing against stock holdings instead of selling. And Abu Dhabi's Mubadala Capital, which manages around $430 billion, launched a $75 million tokenized private markets fund across Solana, Base, and SWI, a big vote of confidence from a sovereign wealth-linked player. One more before we wrap. Robinhood's CEO had his X account hacked this week, and attackers used it to promote a fake meme coin claiming it would list on the platform. Second high-profile executive account hijacked for a token scam in about a week, after Airbnb's CEO faced something similar. If a coin announcement comes from an executive account acting slightly out of character, that's the moment to slow down, not click faster. Put it together and today's a split story. Bitcoin's price is squeezed by macro pressure, but underneath, the infrastructure side, miners pivoting to AI, sovereign funds tokenizing private markets, real-world asset lending, keeps quietly expanding regardless of the daily candle. Price and infrastructure don't always tell the same story. So here's one thing worth doing today. Before reacting to any headline claiming a CEO just announced a new coin, take 30 seconds to check if that account got hacked first. It's one of the most common scams out there now. That's today's Crypto Rundown. If this was useful, hit subscribe so you catch tomorrow's episode. Every day, no fluff. See you in the next one.